we will see this bull run. Everybody who hasn't yet invested or wants to increase their weightings, that will come in Jan. And generally, everyone with new shiny P&L, the hedge funds too, allocate. So I think that gives Jan, Feb and March much more potential. And it could go in as far as June before, there'll be excess speculation and the usual thing. It will kind of collapse under its own weight for a while, and regulation may be the thing that gets the market scared. But I think it extends further in price and time than people expect.
I think we need to start off with the big story, and that is the 4 Bitcoin ETFs that are supposedly getting approved. They're not Bitcoin ETFs, they're Bitcoin futures ETF. There are conflicting opinions in the market. So some people say that it's a great thing for Bitcoin. There are other articles that are saying it could be negative for Bitcoin. What are we thinking, Mark?
Look, I struggle with this. So this little run here and the little pre-announcement by the SEC feels a lot like the pump right before the El Salvador, adoption as legal tender. We're super overbought. And that usually is a kind of buy the rumor, sell the news. The problem with futures in any commodity is it allows you to create paper goods instead of physical goods. So if you look at, there have been massive spikes in oil in the past driven by futures, and that leads to bad outcomes in the short run. So I don't love futures. They have a roll yield problem. You don't get full exposure. So generally speaking, I really wish they'd approve a physical ETF, but this is something. At least it'll give people a chance to buy more.
So if this is the chart of 2017, and I keep going at it. I mean, September, we had a down month. It started to recover in October, and it kind of feels like we're going to get this parabolic bull run. But then you've got, if you look at the time frame, it started on the 1st of October, and by the end of December, or the 17th of December, which was 2 months later, the whole thing started to collapse. Are we expecting the same kind of like up?
So I think it's different, and I've spent a lot of time thinking about this. I think it's going to extend further because we've got new players into the market and they operate differently. So firstly, we've got the ETF. I think we'll get an Ethereum ETF as well. So that's continued news flow. We've also got the ETH 2.0 and the amount of staking that's going on and what that does. That's going to probably lead to a buy the rumor, sell the fact. And I think it's going to be very powerful because, if you have the ETF and this ridiculous shortage of ETH that's going on, you've got something pretty powerful. But the big factor that people need to think about is how institutions asset allocate. It's quarterly and it's annual. So we will see this bull run. Everybody who hasn't yet invested or wants to increase their weightings, that will come in Jan. And generally, everyone with new shiny P&L, the hedge funds too, allocate. So I think that gives Jan, Feb and March much more potential. And it could go in as far as June before, there'll be excess speculation and the usual thing. It will kind of collapse under its own weight for a while, and regulation may be the thing that gets the market scared. But I think it extends further in price and time than people expect.
I'm feeling that everybody's calling for a repeat of 2017. You have the market which went down in September of 2017, and then went parabolic in the following couple of months. It happened in 2013. And everyone's kind of calling the same kind of market now. It feels exactly the same. For those of us, Yoni, I remember you were there in 2017. It feels exactly the same. It's just like watching
very similar charts to 2017. We had a peak in I think May, June, and then sort of a small winter, maybe an autumn, where people actually, there was FUD coming out of China. Exactly like very similar about bans of the exchanges in China in summer 17, and people were wondering whether it's going to kill Bitcoin. There was a big discussion on Bitcoin is dead because of this, and then November, December came in. We just hope, by the way, that history doesn't exactly repeat itself, because we are now in the longest crypto rally in crypto history, by far longer than the crypto rally of 2017, which just lasted 2 months. And sometimes a healthier rally means a lesser of a correction.
So your view is the same as Plan B's view, where he says that he takes the lines after the halving, and the turquoise line, which is on the screen now, is the first halving, the months after the first halving, and you can see that after every halving on his stock to flow model, you get a run. You get a run. You can see that the first halving, which was the light blue, lasted much less than the dark blue, which seems to be that we're having a much longer.
That's a function of adoption. So the more participants in the market, the broader and longer this plays out. So it's kind of a function of network adoption and the kind of Metcalfe's law idea. So it makes total sense that the price is less spiky, but the trends are longer.
Raoul, is this market running because of the futures news? Or is this just a natural Bitcoin run?
I've been talking about this for most of the year. We kind of knew it was going to happen now. So this is not unexpected news. It was coming. We are in the teeth of the best part of the entire cycle. The price is going to go up regardless. We threw all the FUD at it over the summer. That was the correct 50% correction. Basically, the market's been trading sideways in a volatile range since March for Bitcoin and May for the rest of the market, Ethereum. And this is the point. If you look at all of the post-halving cycles, this quarter is where all the gains are made. I cannot stress that enough, that this is the time. It's I keep adding to my risk. Every penny that I get in just goes into this. I'm buying call options now, which I hadn't done before. Because before we didn't have, to get options right, you need to understand time horizon. But when you're in this kind of 3 to 6 month phase, you kind of can nail the time horizon. So options become really good ways of getting leverage without much risk.
Right. Yeah, there's a couple other things. It's funny, Rand, that you brought that chart up, because I was going to refer to that chart. That it's 100 days, right? There was a 100-day difference between 2013 and 2017, and I think there's be 100 days difference between 17 and 21, meaning it'll be longer by 100 days. I think the real problem is this issue that we all are trying to infer a trend from 2 data points, which is a really bad idea. Human beings want to see patterns. We want to see trends. And that's why so many people stare at charts all day. But at the end of the day, there is an elegance to the design of Bitcoin, right? Whoever Satoshi, he, she, they were, this idea of cutting the block rewards in half incents the price to rise, because the miners' costs don't go down, right? Their costs don't go down by half on the day of the halving. And so the price needs to adjust, or those miners go out of business. So it is an actually elegant kind of price go up mechanism, but all of price is a liar, right? Price has nothing to do with the value of the network. The value of the network is determined by the number of users, the adoption rate, the use cases, the technology changes. And so what I'm concerned about in this particular run, if you go back to 2017, the peak was the day, December 18th, of the introduction of the Bitcoin future. Futures allow big speculators to do is take the other side. They can go short.
Yes.
Exactly what prompted the crush in 17.
The ETFs, in essence, are a long-term play. We should think about sort of GBTC and probably retail investors and institutional investors who want long exposure to Bitcoin but don't want to handle the keys and the coins to buy ETFs. ETFs, if you look, everything Spider, etc., it's very long oriented to accumulate assets. Where I 100% agree on futures in 2017, I said this introduces short into the system. Institutional short, when back then in 2017, the sentiment was very negative in institutions. Every single institutional investor we spoke to back in 2017 were actually naturally short crypto, thinking this is, as Jamie Dimon back then said, or maybe Warren Buffett, rat poison or something toxic. I think now we are seeing digital assets research coming from all of the big banks. We're seeing large institutional investors that are long only, real, $1 trillion, 100 billion, in the range of $100 billion to $1 trillion and more of assets starting to allocate into crypto. And I do think that creates a new floor for crypto.